My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain, but to educate, teach you, and put all this in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. This market is divided into four camps. You got the optimists who think there's a vaccine right around the corner, more on them later. You've got the pessimists who think it'll take longer. We won't get it fast enough to avoid a serious recession. You've got the blasé camp that believes the latest COVID outbreak is no big deal because the mortality rate's lower. Then there are the super pessimists who argue that spiking cases mean no sports, no going out, and millions of job losses. These four camps, I have to tell you, they are going to at war. They're at war every single day, including this one, where the Dow gained 557 points, S&P advanced 1.34%, but the Nasdaq inched up 0.94%. Only one cohort can win at this time because there's just only so much money going into stocks. The recovery plays and the recession plays don't go up simultaneously as fund managers need to sell one group to swap into another. And that's why the Dow stocks did much better than the S&P, which in turn did much better than the once scorching Nasdaq. This is highly unusual, but it makes sense if you think of the market in terms of competing camps. So who's winning? Or who won today? I like to use the sore thumb index, as in which stocks stuck out like a sore thumb today. Let me give you today's examples. First tell is McCormick. The big spice maker roared to a new high, driven by fervent camp followers willing to pay any price. What do we know about McCormick, aside from the fact that they make this, okay? What do we know? Well, it reported a huge blowout 3 weeks ago, hotter than Frank's hot sauce, hotter than crushed red pepper. But after spiking up on news, investors took profits over the next day and a half, and the stock gave up just almost all of its gain. What did McCormick do wrong? Was it the conference call? Did they pick up less aisle space in the supermarket? Was there some hidden metric that was weaker than expected? No. I'll tell you what happened. McCormick happens to be the ultimate stay-at-home recession stock, but it had the misfortune of reporting on a day when it seemed like America was reopening and COVID was under control. Now the stock is roaring and it sticks out like a sore thumb. The strength of McCormick tells you that the recession camp is ascendant. And people are betting on at least a partial lockdown. If you can't go out to eat, you're much more likely to cook at home. And if you're cooking at home, you need McCormick. When McCormick spikes, it tells you that 15 million jobs could be threatened because restaurants and bars might not be able to stay open. It's also a sign that people are betting on the no more stimulus theory. At the end of the month, the federal government's expanded unemployment insurance program comes to an end. That's been a critical lifeline for American consumers. If Congress doesn't pass another stimulus, it could be a disaster for the economy. But McCormick's exactly the kind of stock you buy in that scenario. Second sore thumb? Well, our old friend Clorox. This goes beyond sore thumb, frankly. It's more subterranean homesick blues, as in you don't need a weatherman to know which way the wind blows. Thank you, Dylan. Clorox soars when the economy's in trouble, particularly from a pandemic. The rally here practically screams that the pandemic's going to get worse. Judging by some of the numbers after the close from states, that's true. Now, you hate to see this sore thumb because it's not just health, it's fear. When this stock trades sideways, you know we're doing better. But when it rallies, that tells you the outbreak could be out of control. What else? Now, the whole drug complex rallied hard today, including Johnson & Johnson, which reports tomorrow. The biotechs are classic slowdown stocks, and they were on fire, led by Regeneron. By the way, even with fabulous Moderna news tonight, more on that in a second, I still expect Regeneron to win a race, maybe for a vaccine, but certainly for a treatment. The fourth sore thumb, new company. Probably never heard of it. Encino. No, not the town near L.A. It's a financial technology company with software that helps banks streamline all sorts of processes. And Encino just came public and the stock surged $60 right out of the gate. That's an insanely successful launch. Hope you got some. But here's the thing. This market never has enough money for both the banks and the financial technology stocks. It's either one or the other. Right now, the banks are laden with potential bad loans, and the fintechs have no mortgages, no home equity exposure, no credit card risk. We just got results from three of the largest banks in America today, Citigroup, JP Morgan, and Wells Fargo. But the action in CNO tells you we don't need no stinking financials. They have too much economic risk versus this pristine fintech play that just came out of the chute. And that's why JP Morgan could barely rally, even though it reported a truly heroic quarter. It's why Citi stock got shelled, despite what I thought were solid results. And Wells Fargo, don't get me started. When the head of a major bank takes an axe to his dividend, 80% cut, and straight up tells you the quarter was disappointing, it's time to swap out of Wells and swap into fintech plays. Maybe not this one, but maybe this one. All three banks stress that they don't have any sort of crystal ball. Future's murky. With the exception of trading, they're talking about stagnant growth. Their franchises may be valuable. Citigroup, for instance, sells at an enormous discount to its tangible book value, almost impossible. But because it's no longer allowed to buy back stock, they can't really close the gap. And that fifth sore thumb tells the story, MasterCard. This is the ultimate non-bank financial, which soared on a conviction buy nod from Goldman Sachs. Finally, to round things out, Walmart and Costco lit the sky up. These two say the same thing. Look out. Another lockdown might be coming because these are two chains that are regarded as essential service stores. And they thrived in March and April and then went down when we felt that the lockup was ending. Or lockdown was beginning. No. The lockdown was great for these guys, and then the unlock was great for everybody else. Walmart and Costco are working for the clamp down. That's terrible for our economy, but it's not a big deal for other countries. That explains some of the today's more incongruous winners, by the way, Union Pacific, Caterpillar, Freeport-McMoRan. These are cyclicals that benefit from a strong global economy. Not domestic, but global. Union Pacific connects ports on the West Coast with the rest of the country. It's great when people are ordering everything from China. Caterpillar is a big China business and a big oil and gas business, by the way. It works with crude above 40. Freeport's a copper miner, and may I remind you that the Chinese consume half of the world's copper. Now, remember when I said there's not enough money to slate the supply from other groups when we get the lockdown thesis. And that's why the NASDAQ lagged the S&P and really underperformed the Dow today. The tech stocks in the NASDAQ need to slow down, but they also need very low inflation. Unfortunately, the consumer price index came in way too hot, plus 0.6%. Inflation erodes the purchasing power of money in the future. Growth stocks trade based on the money they'll make in the future. And that's why Amazon went down even as Walmart and Costco zoomed higher. There, puzzle solved. That said, the stupendous thing about this market is its ability to change stripes at any given moment with a whole new group of sore thumbs. There could be just tremendous growth tomorrow in not these, but the guys who lagged. Why? Moderna tonight said that its vaccine, in an initial safety test, produces antibodies to the coronavirus in every patient. That's an incredibly bullish event that sent that stock soaring in after hours and might put the wild optimists, the actual V-shaped curve believers, in control tomorrow. But after today's session, I wonder if the baton's being passed from the NASDAQ leadership to the stodgier slowdown plays that you see in the Dow. If that's the case, then the cloud plays, the e-commerce enablers, and the cybersecurity stocks, they might take a backseat for a bit, maybe not go up as hard. The weird thing is that you can buy the recessionary consumer packaged goods plays along with some of the bigger industrials that need a healthy economy, but that industrials that ran are global, not U.S. The bottom line. Today's action suggests the United States will stay mired in the pandemic, while the rest of the world's flattened the curve and returned to growth. Tomorrow, I don't know, with this maternity news, who knows?
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.